Hey everybody, it's Jer. I have had in the last week or so, as you know, I've been talking about Waitr holdings, which I'm invested in, and there are people that are concerned about the earnings report coming up. As you know, companies do quarterly earnings report, they do annual earning report, and Waitr Holdings has an earnings report that's either coming up, I believe it's coming up on the 8th. That's not confirmed by company, but based on when they've done earnings reports before, it would be on November 8th, I believe is what has been said. And there are people concerned because they're like, oh, well, what if there's bad news? What if they didn't meet expectations? And yada, yada. And I'm going to kind of lay out why I'm not concerned, but also lay out why I think that even if they did really bad on earnings, the company should still be trading way higher than what it's trading at now. So let's go. Before I shared in other videos and on my Twitter, which is at Jer_Johns. The Waitr Holdings report, DD report, kind of giving all the catalyst and what they have going on, where they've invested their money, what they have planned, and just a list of everything. You can find that on my Twitter. Then let's go here. So, Waitr's earnings. So the last 4 quarters, if we look at the last 4 quarters without this next quarter, whatever it happens to be, you have $49.17 million for this last quarter before this one, $50.93 million, $46.85 million, and $52.73 million. The total for that ends up coming out to be about $199.68 million. So that is the earnings for the last 4 quarters. So if you took that and said, okay, this is the last year, this is what they made, that's where you get the earnings like amount right now. Market cap for the company is the total amount of float, shares that are traded, total amount of shares available that are trading, and you do that times what those shares are trading at currently, and you end up coming up with 227 million. I visited some different sites to get this number, and it may be a bit inaccurate, but it's somewhere close. So at $194 a share, we are currently trading at 1.13 times revenue. So that's actually really, really low compared to most other companies. And I'm going to compare us against our competition. Compare Waitr against Dash's competition. I say our because I'm invested in it, so I consider Waitr ours. I do not work for Waitr, I'm not employed by Waitr or anybody else that has anything to do with food delivery. So Dash, DoorDash, their ticker symbol is Dash. They've only been around for 3 quarters, publicly traded for 3 quarters. So they became public traded this last year, and so they haven't even reported 4 total quarters yet. So I'm just going to assume that they made the same they made last quarter. It may be less, it may be more, but you take that 1.24 billion plus what they made last quarter, 1.24 billion plus 1.08 billion plus 970 million, you end up with $4.46 billion in revenue. Their market cap, also taken from free float times what each share is trading at. Market cap, also I found on different websites, is around $66 billion. So this would put them, with their trading currently, which they're trading at $194.80 per share, that puts them at 14.76 times revenue. And then, of course, the disclaimer, this report is for informational purposes and is not investment or trading recommendation. Always do your own research before trading or investing. Okay, next up. So, Waitr Holdings. If we took the 14.76 times revenue that DoorDash is trading at, and you put the 1.13 times revenue into that, you could put 1.13 times revenue into DoorDash's times revenue and get 13.06. If you took that 13.06 and multiplied it times the 194 per share that Waitr is currently trading at, you get 25.34. If you are using the same math that you are using to get where DoorDash is trading currently, and let me look at this because it's hard to read on the screen. And if you need to see this, you can actually go to my Twitter. I'm going to share this on my Twitter as well. Using this math, the 14.76 times revenue, compared to what DoorDash is currently trading at, Waitr stock is undervalued by $23.40. If Waitr traded at just 5.65 times revenue, the stock price would be $9.70 per share, or closer to $10. On 10/29, this last Friday, Waitr Holdings closed at $194 a share. This is why I'm going to tell you that, to me, in my opinion, the stock price for Waitr is way, way undervalued, obviously. It's underpriced, obviously. To me, they could come out with their earnings report on whenever it comes out soon. They could come out and say, hey, we didn't make anything. We didn't make anything this quarter. There's nothing. We have nothing. While that would be concerning, and that's not what's going to happen, that would mean that they still made for the year right around $150 million just with the last 3 quarters before this quarter. So they are still trading. Take 25% off of the 25.34. And what do you get? You end up getting something like, I'm really quick math here, 20 divided by 4 would be $5. 5 times 3 equals at least 15. At least $15 a share. That is if Waitr came out and said, we didn't make anything, we spent all our money, all the revenue, we're at zero for the quarter. That's if they came out with that. The shares are still undervalued, way, way undervalued at 194. So this is why maybe people will see something scary and think that that's scary. Nothing that they say is going, like, there's hardly anything that they could say that would scare me, to be honest. You would have to really come out and say zero, and they're not going to do that. I don't see that happening. So to me, I think that stock price might go down. Who knows? People might get scared, but I'm not going to get scared. I'm staying right where I'm at. If anything, I'll find a way to buy more if it drops because I want more. $1.94, sign me up. I want more. And I'm not telling you that's what you should do. I'm not giving you advice. It's not financial advice. This is me. This is my own opinion. You should do your own research, obviously, before you trade or invest. Now let's go over to marketbeat.com. Hopefully this shows up here. This is where I got the information at. You can look here. This is analyst ratings. You go over to earnings, and you can get the information for what their earnings were, what their actual revenue was up until this point. Something that's crazy to me is that I don't know who sets these estimates up or these expectations up, but they're crazy to me. It's actually kind of likely if you look at the previous beat miss that, yes, compared to what they're expected, I guess, they have only hit or beat earnings 4 out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 4 out of 11. So it's likely they may be, or they may miss earnings. But that shouldn't scare you, or it doesn't scare me. Anything can happen. I guess maybe people do get scared. But what I'm saying is that this company is trading at 1x revenue. And like if you go look at Dash, they have a 65 billion market capitalization based on like their share price and the available float. And they're still expected, like they have a 199.65 price target. That's insane to me. So they're expected to go even beyond what they're trading at now, or what their revenue times earnings, or times, yeah, what their multiple of earnings is. And here, Waitr is still just trading at 1.13 times earnings, whenever they actually should be. Let me pull this back up here so I can see when they actually should be trading somewhere closer to. If they're just trading at that, what was the number I gave? If they're just trading at 5.65 times earnings or times revenue, then it's just $9.70 a share. Meanwhile, Dash is over there trading at, what did I say, 14.76 times revenue, which is just insane. So regardless of what happens on earnings, Waitr Holdings is way, way undervalued. This is bargain stock. Bargain stock. I wish I could shake people and be like, stop worrying about earnings because the stock price might decrease, but still, we are trading way lower than what we should be. So don't get scared. But that's just my opinion. Take it for what it's worth. In my opinion, the stock should be trading closer to that 25.34, which would meet what the multiple that Dash is trading at their revenue. But hey, I would be happy with $10, So I don't know. This is just insane to me how undervalued, underpriced this stock is. I'm going to stay with it. I'm staying with it. But again, that may just be me. Anyway, that is all I have. Pay attention to the earnings call or transcript, whichever one you look at. Pay attention to it, but I'm not putting a lot of weight on whatever they say, because I see them going one of two ways: growth with their investments and what they have invested their time and money into, with those catalysts that I showed here, because this is just nothing but growth potential to me, from Morgan Stanley's 15% stake in the company to the prepared food and alcohol and grocery delivery, to cannabis delivery, to crypto payment processing, to in-stadium food delivery. Like, this thing the potential is really, really there. Then you add in the numbers, which I just showed you here and here, and it's just confirmation that this stock is trading way below what it's worth, way, way below what it's worth. But I don't know. Maybe I'm missing something. I don't know what I'm missing. If I'm missing something, I guess if I'm missing something, put it in the comments. I've also debunked every single thing that any short has brought to my attention. So I don't know. This is crazy to me. All right. That is all I have for today. For now, I love you all so much. And until the next video, I'll see you very, very soon. Bye. Mwah.